I want to thank WeWork for facilities, and we want to thank the previous speakers for our event. And what we're going to do is we are running a little bit behind, but we're videotaping this. And what we're doing now is we're going to have the second panel. And the second panel is blockchain and opportunity zones. And that's something that's affecting real estate with the brand new Tax Act that finished up in December of 2017. There's a lot of advantages of using these opportunity zones, and I know a lot of people want to learn about that, how that affects real estate. So what we're going to do now with this panel is we're going to have a moderator whose background is in real estate. And so I'm going to hand it off to William Morales to moderate the panel. William?
Thank you, David. Thank you. All right. Well, ladies and gentlemen, thanks for coming. This is a great opportunity for all of us here to meet and to greet each other and network. So before, I want to thank David again for inviting me to be a moderator. So let's get with the panel. First, we have Brian Crane, John Dean Marcunis, and Manny Alejandro. So let's start with you guys. What is an opportunity zone? And if you could explain it in layman's terms.
Sure. Hi, everybody. I'm Brian Crane. An opportunity zone or a qualified opportunity zone is a vehicle for deferring capital gains on an appreciated asset of some sort. So if you have an appreciated asset, you liquidate that, you make an investment into another investment via a vehicle of the opportunity zone, and it allows you to take advantage of deferral of your taxes immediately, capital gains taxes that you would have had to pay on it, and then there are two steps that bring it up so that your base rises and you wind up actually having to pay your capital gains tax on a lesser amount. I'm sure you can give us an additional definition there.
Thank you, Brian, and thank you, William, and thank you again, David Whiting, for the invitation to speak tonight with this big crowd we have here. I think the rain kept some people out from attending. Again, my name's John Dean Marcunis. I'm a blockchain real estate industry advisor and business development consultant. I am not a techie. I'm not an engineer or a stack developer. I articulate blockchain use to businesses, especially to businesses that are dealing in real estate. And they range from anywhere from, let's say, mortgage companies, land registry, title companies, so on. It's very interesting. Opportunity zones, I've been reading up on it. I'm not an expert, but it involves real estate. And a little while later, we can talk about how blockchain can impact it and really help quite a bit. So I think I understand that the opportunity zones are low-income census tracts, and there's quite a few of them. And I believe it's a federal law, if I'm not mistaken. And so in New York City, they've got quite a few. I was looking at a map this morning of those census tracts, and they're all over the map, more or less. So you'd be surprised at the low-income census tract areas here. So there's a lot of opportunity in the opportunity zone.
Thank you.
Laugh from the crowd. Ha ha.
Delayed boomerang reaction, right? Hey, I'm Manny Alejandro. I'm an attorney. I focus on blockchain. So thanks for having me. I'm happy to be here with you all. Thank you for the invitation. So I've done some work or started to do some work with regard to opportunity zones in terms of creating some funds to invest in opportunity zones. It's a great idea from my perspective in terms of economic revitalization. So there are statutory areas that are deemed opportunity zones by the federal government. And it's really looked at as a means of economic revitalization of those areas. So firstly identify those areas need investment to stimulate investment through beneficial tax treatment. So essentially, I think there's like 5, 7, and 10-year tax deferral bases to invest in particular types of opportunity zones. It's really interesting. I think there's some questions right now that a lot of people have in terms of how do you actually launch a fund? What are the real benefits? Can you actually have rental properties? Can you sell within those periods? Do you lose the tax bases? So there's stuff that needs to be ironed out. I was doing a fair amount on it, and there was a lot of activity, and then we had the government shutdown. So there are a couple of trade associations, industry associations that were actually pushing to get a lot of the answers to these questions. I think some of them are becoming clearer. Some of the documentation that I've seen actually is real interesting. I mean, I was working on an offering document, and like a good lawyer, I was looking at someone else's document to kind of just, just give me an idea of kind of what it should look like, right? And this document was like 250 pages. I mean, it was tremendous. And and as I'm flipping through it really, a lot of the questions that I had were addressed insofar as that it was treating things both ways. So this offering document was pretty cleverly crafted in terms of waiting to get guidance from the Treasury. They were just moving ahead and saying, we could treat this thing this way or treat it that way. And as long as the investor grants permission, then, full steam ahead. What we were worried about in terms of the group I was working with was, if things didn't go the way we thought, we were concerned about litigation or worried about having to return the monies to the investors. But so we're reconsidering how we do it at this point. But I think I think it's a tremendous idea. I was actually in Puerto Rico a couple of weeks ago, and most of Puerto Rico is deemed an opportunity zone. So you're going to see tremendous investment in Puerto Rico, which is great for Puerto Rico, economically in terms of jobs and all that. But it's just a great way to stimulate the economy and investment in neighborhoods that and areas that really undergoing a lot of difficulties. And it's not just opportunities for land developers, right? So it's a kind of situation where, well-heeled people are getting involved in investing in these hedge funds. You're going to be able to see vehicles, my understanding, that'll be set up where you're going to have, other average people who otherwise wouldn't have. I don't want to use opportunity, but wouldn't have the opportunity to make an investment. They now will. But I think overall it's a great idea. We still need to iron out the wrinkles. But I think it's early days. But I think down the road it's going to have a major impact.
Great, thank you. One question I wanted to know was, especially from Brian, is how does an investor can, what's the word I'm looking for? What is their incentive to be in an opportunity zone and in an opportunity fund?
Sure. I think the investors, the initial incentive for the investor is to be able to delay the payment of their taxes through the investment in the opportunity zone fund. We actually have a fund that's created. It's in the marketplace. We're raising capital for it right now. It's kind of unique in that it's not directly going into real estate or real estate development, whereas most of the opportunity zones that I'm aware of, the opportunity zone funds that I'm aware of, are investing in real estate, and they're investing in multiple different real estate projects within the fund. We have kind of created something that's very unique, that we're using the Opportunity Zone Fund as a vehicle to incent people to make an investment directly into our project, which happens to be a blockchain company. It's a blockchain project that's doing infrastructure work. It's mining cryptocurrencies. We have some very interesting and unique wrinkles. I'm not here to talk about that, but I'm here more to talk, and I'm happy to talk to anybody about that. But this is to talk more about the use of the Opportunity Zone Fund as a vehicle. And so the way we have structured it, it's an SPV, which is a special purpose vehicle, and 100%, in the offering document, 100% of the assets that a person invests into our Opportunity Zone Fund goes directly into the investment, that as if you were investing outside of the Opportunity Zone. There's no fees taken off the top. We don't the dividends that will be paid out from the company. They'll be paid out, 100% of those dividends will be paid out to the investors via the SPV. The real incentive here is to, if you have an appreciated asset, you can put it into the SPV, you can put it in, which is in the investing in an entity that is existing inside of one of these opportunity zones that we've discussed. And as this goes up in, or as time progresses, your cost basis moves up in value. So the effectively at the end of the 10-year holding period, if you, for example, if you put $100,000 to work in this fund, or if you have $100,000 of an appreciated asset, you would normally have to pay your capital gains tax on that. You take that appreciated asset, you put it into an opportunity zone fund. As in year 5, in year 7, in year 10, your cost basis graduates so that at the end of that period, you're paying taxes on the equivalent of $85,000 rather than on $100,000. So there's obviously some incentive there. The biggest incentive out of these opportunity zone funds is that the profit or the growth in these funds going forward is tax-free ad infinitum. So as long as you are, once you've come through the curing stage, any additional profits, you'll never pay a capital gains tax on it. And it is a very strong incentive to get money and to get capital into these areas that need some development. So I'll hand that back to you.
That sounds good. So for John, do you see blockchain being involved in an opportunity zone in the near future, if not sooner?
The short answer is yes. I don't see it coming in sooner, but I'd like to make a statement. I'd love to see one of these census tracts or one of these opportunity zones actually do a pilot program with blockchain across the board. Let's look at the opportunities with blockchain. Okay, first of all, there's real estate involved, so you can use blockchain for the transaction itself, from A to Z.
You use blockchain for the real estate
the purchase,
transaction,
A to Z, purchase to close, and all the actors in between are on the blockchain. Secondly, are the funds. You can use blockchain to generate the funds and manage the funds, and then take it a step further if you can, and I might ask Brian this, and then do some asset tokenization magic and offer tokens of these funds and trade them or sell them on an exchange. Maybe that could be done. I don't know. Third thing, involvement is, I think, stuff that Manny here really knows all about, and that's the legal side, and there's extra legal documents, I would think, are involved in an opportunity zone. I think they should be on the blockchain in black and white, posted, immutable, so that there is clear, just complete transparency with what you're doing. Because I see a lot of players in this opportunity zone market, and I think the use of blockchain will help keep the transparency moving forward with all the different actors involved, from the real estate acquisition to the fund, and to the legal side and all the documents involved. Again, I would love to see, and again, this goes back to government involvement, which David Whiting brought up earlier, and that is perhaps a pilot program where we do an opportunity zone from we start it with a blockchain being involved. That's my take on it.
Sounds good.
I agree with a lot of that. I think in terms of transparency, there's a lot of opportunity there, right? I think the questions that we got into in terms of doing a deep dive in terms of how to actually invest in these, how these created, are really about your tax basis. So essentially taking your capital gains and investing in an opportunity zone fund, and then making sure you hit that statutory period of time. So I think in terms of being able to track all that in an immutable way would be awesome. In addition, I think it would be really interesting, particularly because I don't know what the records are like of a lot of these areas, particularly because they're in undeveloped areas by nature. That's what an opportunity zone is. I'm not quite sure if it's a neighborhood in Baltimore where I don't know what those records look like. And unfortunately, because those neighborhoods were underserved, maybe there's issues with the records there. So, we could probably get everybody bumped up to an even playing field, if you will, through blockchain, which would be great. What I like about really the creation of it is creating a stimulus program. But I think what needs to be done too is we need to really have more advertising to do it, and we could really use, if we use blockchain to do the recordation of the transactions and to see how these actually occur. I think there would be an environment where there would be more investment. I think right now there's just a lot of confusion in the industry about it, even in terms of defining it, in terms of what are the benefits, in terms of can you get a partial benefit? Do you give up the benefit if you're not in it for the whole period of time? So through the blockchain, I'd love to see transparency, and I'd love everybody to somewhat emulate, because there's no secret sauce, there's no secret science to it. If it's going to work, it's going to work right for everyone who's in it. So I'd love to see more transparency in it. I'd like to see the Treasury get more involved in it in terms of FAQs, in terms of more education. So I'd love to see all that happen.
My question would be another one was, since the governor, designated certain parts of New York for an opportunity zone, do you know if there's any pullback from some of these neighborhoods? Any protest? Because you are going into a neighborhood, you're bringing in jobs, you're bringing in new opportunity, but at the same time, in your opinion, have you seen any pullback from some of these neighborhoods?
Well,
that's a loaded question.
Yeah, no, I think that's an interesting question, or it's an interesting concept. I personally haven't seen any pullback or pushback about that, but I do know that the process of selecting the different opportunity zones was very political, because each governor in each state wound up, ultimately deciding which of the zones, which of the areas would be considered an opportunity zone. There was all kinds of politicking, if you will, to try and get your area, an area where you might have some investment, designated such so that you and your pals can come in and you might have a plant. I know there are examples of somebody has a project right nearby that's just outside, and if they could get that area to develop, then some holdings that they have are going to be worth a lot more. So I know that there was a lot of arm twisting in the state houses to get those designated. To your specific question of feedback or pushback, I'm not aware of any. Maybe you guys have some thoughts. Here you go.
Yeah. I'll share a little bit about that. In a former life, I worked in economic development here in New York City, in Queens specifically. And there are many these low-income census tracts in Queens that are opportunity zones. One of the first things that a community does when they hear about investment in their neighborhoods is look at where that investment is going and what are they investing in and building. And in many cases, when they're building housing, the community, low-income community members get very nervous about being priced out of the market because rents go up, prices of houses go up, and that's a real concern. So one of the things that we've talked about in the past, not so much with the opportunity zone, but related in economic development, is bringing in the proper development, which is low-income housing and a good mix of businesses to service that community. So yes, there is pushback by community activists, and they have a real concern about being priced out of the market.
Makes sense.
Neighborhood becoming gentrified.
Right.
And where do you go? And what do you do?
Yeah, I think those are keen observations. I mean, if you look at kind of what's happened to New York over the last 20 years, right? I mean, effectively, you didn't need certain neighborhoods to be identified as opportunity zones. You had developers jump into neighborhoods and gentrify those neighborhoods, put up a coffee shop, charge $5 for a cup of coffee, and somebody gets a really fancy sandwich there too, and spends $15 for lunch, and all of a sudden it becomes a cool neighborhood. And what does it do? Well, the bodega closes down, and the people who live in that neighborhood get squeezed. So that's been going on now for the last 20 years, and it's pretty strong. I mean, if you look at Brooklyn, I grew up in Brooklyn. I mean, the neighborhood I grew up in is completely different than when I grew up there, and that's just because people couldn't invest in the stock market, so they invested in the real estate market, and it was a get-rich-quick scheme, and they put up these high-rises, and there you go. So the concern is this another way for rich people who have capital gains that they want to invest in opportunities to get even richer? So the project that I'm working with is actually in LA, and it's actually to create affordable housing. So we're making sure that within a development, we have so many units that are affordable, not low-income housing. We're calling them affordable housing. So they're going to be nice apartments that people could buy or rent that, we feel that we don't want to participate in people getting squeezed because, this is a long-standing program. But if there's a change in administrations or whatever, I mean, who knows what's going to happen? So, people are going to invest in this thing for 10 years. Who knows what's going to happen? If this is a land grab and people are squeezed out of neighborhoods outside of and on top of the gentrification that's occurred already. I mean, think about if you go to like Brooklyn right now in the Bronx. I mean, there's areas of Bronx that are being developed very quickly, right? So, Brooklyn, Queens, look at Long Island City. I mean, the whole Amazon deal fell through because Long Island City's already developed. So the people in Long Island City, like, this is crazy. It's going to make it even more crowded. People didn't know, and it's kind of what you're alluding to, is that people felt like there were backroom deals. They didn't know what was going on. So I think, again, there's a lack of transparency. I don't think there's any backroom dealing going on with the opportunity zones. I think it's people just don't know enough about it yet, and I think people are worried that they'll get squeezed. So I see that there will be a big push to make sure that whatever's done, there's a fair amount of affordable housing units, as opposed to what happens in these high rises. There's a lottery for like 3 apartments, which I'm not sure how that lottery's actually, awarding or who wins, and I don't know anyone. I know a fair amount of people that won an apartment in a really expensive building and they pay like, $50,000 for it, although supposedly they exist. Where they have, really low income thresholds to participate in a lottery. You need to make $12,000 a year. So like everybody's out of it that can't participate. So, there you go. But I see a big push. And again, it's fluid, right? I mean, you look at kind of the landscape and what's going on in New York. You look at someone like AOC, who's very influential. You don't know how things are going to change in the next couple of years that are really going to influence this. What I'm concerned about is the fact that people are making long-term investment in this, and I'm not sure how it's going to play out. But I think you ask a great question. I think the overarching concern would be, do we make, in an effort to improve the community and improve those neighborhoods, we're squeezing the people in those neighborhoods out. So we're really improving the neighborhood or hurting the neighborhood? I mean, that's a tough call. That's a tough question.
Now, in your opinion, for the panel, is there a way that you can involve the community in terms of maybe getting them to invest? I know they might have low income, but is there a way that the community can participate without squeezing them out, so to speak?
Well, let me take a stab at that. This is really important because the community has to be invited to meetings. They need to be involved with the decision-making that's going on with this. And in many cases, in Queens, for example, where I worked, we had economic development agencies. Smaller economic development agencies will create community forums for people to come and voice their opinion and get involved in the decision-making. In some cases, it's called a charrette, where you come in and look at a variety of different projects together in a big hall and figure out, what this is an interesting project, a mixed-use project. Here's a hotel. Here's a residential tower, and what is that residential tower all about? What's it going to cost to rent it? So it's the community has to be involved, at the end of the day, it's about economic development, which really needs to affect the people living there, and it needs to be a win-win with the investors going in and the funds being developed to take advantage of the situation with the tax breaks and the capital gains and so forth. So I see a big need for that, for community involvement, and it just loops me back to blockchain. And I think if you want complete transparency, put everything on the blockchain. Maybe a public blockchain, where the citizens can look at what actually is happening in real time, and look at what documents have been posted, what investors are there, who the developers are, what decisions are being made on a blockchain. And that's the official account of the process. Then you'll get some transparency, and there will be no, I hate to say it, but I think there is a lot of wheeling and dealing, but maybe that'll help get rid of the wheeling and dealing and help the community out in the end.
Yeah. Well, I guess my thought is that we're focusing a lot on real estate and real estate development in these opportunity zones, but there is other opportunities for investment, for job creation as well. So it's not just that buildings are going in and they're driving people out or the neighborhood is changing. You know, a lot of what is being done is something that's going to create jobs. And I think a lot of people, I would think that a lot of this, or in any development that is going in, if it's to build jobs, would have to be done under existing environmental guidelines, under existing development guidelines along that regard.
Employing the local workforce.
That's right. Yeah. That's right. And that's, of course, for that. And, you know, on the early panel, they were talking about, you know, getting to know the people and the human factor. I forget the gentleman's name who was doing that, but he was talking about the human factor and what you're passionate about. And even though I come out of the capital markets, I'm really passionate about our environment. And especially our ocean and keeping plastics out of the ocean. So I think it would be very important for anyone, and this is not, I'm bringing it back. It's not a tangent, I'm bringing it back. It would be important for any of the development that goes on in these areas to meet appropriate environmental guidelines in the area. And maybe the blockchain could help us quantify that.
No, definitely. You know, I wanted to touch on Manny's point, especially if you're going to build these housing and you're going to make it affordable. Now, and this is a question for everyone, what's the guidelines to make it affordable? Is there an income requirement? Is there a credit requirement? You know, because you're talking about people that might have gotten hurt in the past because of job loss, medical bills. How do you qualify someone to get into these housing?
Well, I would think, again, I would think.
Put you on the spot.
Yeah, no, because it's not. This is definitely not my area of expertise, but I think it's going to be much more yours. But I would think that everything would have to be, any of the development that's being done, even though they're in opportunity zones, they've got to be done under existing rules, regulations, laws, and legislation. But
yeah,
more specific.
Yeah, I think, you know, Manny's got his hands in it a little bit, and I've had my hands in it a little bit. Affordable housing does have guidelines. In fact, a developer comes in and it's a public-private partnership. He gets, in this case, a developer who's developing something or taking an old building and rejuvenating it. A certain segment, a certain percentage has to be within certain income limits. So you'd have a tiered approach to it with X amount below a certain income level, and then step up to perhaps the higher end. So there are guidelines, and they're pretty strict, I think, for the developers. And to make it work, you have to, I think that you really have to offer these incentives to the developers and investors in these opportunity zones to help make that work. Otherwise, they're not going to go in. Because there's low-income census tracts or neighborhoods where developers won't go in because they don't get their tax breaks, and that's a shame.
No, that's spot on, and also, I want to mention, you talked about mortgage fraud. Another big fraud we face in the city is, people who have these rent stabilization apartments. Talking about blockchain, I mean, my God, that would wipe out a lot of these people who have these apartments and they're not, they're being passed generationally on, and they're not transparent about how much they make. And I used to live in Stuyvesant Town for a period of time, and my rent was, I was a dummy because I moved in there later, and I'm honest, and I'm an honest lawyer, so it's kind of, I don't know, figure out where you're gonna go with that one. But I was paying like 5 times the amount of the guy who lived next to me, and then I see the guy, and I'm like, hey, where you going? He's like, oh, I'm going to my house in Hamptons. Oh, really? Have a nice weekend. And he's got the Mercedes SUV downstairs, and he's living in a rent-stabilized apartment. So, we've got to be careful, particularly in these big cities where, let's be honest, there's a lot of corruption. And if you're going to create an enterprise for people to invest in and create tax incentives, great, and then people able to participate, we want to make sure that the people who really need to participate. And I'd love to see transparency in terms of people's incomes. We could do private blockchain. We need to put people's income on there, but I think we have a lack of transparency right now, and I think that's what's leading to a lot of frustration in the city. As I mentioned with Amazon, I think it's leading to a lot of frustration in terms of how these deals are done. We don't really know what's going on. And community boards are being left out. Again, Amazon community board, Long Island City felt like they didn't have a seat at the table. And with something like this, this is really good situation for everybody to work together collaboratively, and for there to be transparency. And I think the blockchain could do that in terms of making sure that the right people who need to get housing are afforded that opportunity to get the housing. And there's transparency and there's disclosure of people's financials, and we root out the fraud. So to the extent we could use blockchain to root out the fraud, I think that'd be a really good step forward for us.
Sounds good. David, you have anything?
I was thinking a little bit about a question about the neighborhoods and what you're talking about, not getting people locked out. So maybe, Brian, you could talk a little bit about the mechanics of the minimums of who can invest in the funds, how the funds are set up. Some of the funds are set up for accredited investors, and some of them are just for regular retail investors.
Sure. The only real thing I can speak to with certainty in that is around our fund, and our fund is the vehicle that you're investing, the company that you're investing in via through this SPV, through the Opportunity Zone Fund, is doing a Reg D offering. It's a securitized token. It's a Reg D, so that would be accredited investors only.
Right. Is there any other ones maybe that you not specifically know of, but that you're using, but other opportunity zones where there's different types of structures?
Not that I'm. There will be multiple different structures coming to the forefront, of course, but I'm not aware of any of any that would be open to non-accredited investors.
Oh, okay.
Because this comes to my question from before is, involving the community, because maybe someone might want to invest in a fund like yours or anybody else's. So I think if you limit it to accredited investors,
there's no doubt you're locking out unaccredited investors. You're locking out somebody that maybe they've got $1,000 that they could put in, or maybe they've got $600 that they could put in. They're going to be locked out of this. There's no doubt about it.
Right.
However, I think again, we're talking about blockchain. We're talking about the tokenization of real estate and tokenization of those assets. That's where you're going to be able to provide access to this asset class for lower income investors, or people that are just starting to put a few bucks together in savings. So that's where that's going to come from.
Yeah, Brian hit it right there, right on the head. How about, can you imagine this, ladies and gentlemen, minorities in these communities being able to invest in their own community? Right. And how do they do that? let's say Brian's got a fund. You get, they don't have to be accredited, but if they can come in with minimums, let's say it's $1,000 or $10,000, families can start investing in their community in the funds. They certainly can't go out and start purchasing real estate or businesses, but with a blockchain asset tokenization model in place, I really see an opportunity for people who live in these communities to let's invest in their community.
That's right.
With minimum amounts, and then be repaid with dividends as these projects pay off, start bringing in revenues, and paid out monthly or quarterly on with a blockchain payment. Fantastic.
Yeah, I think the key is if you keep the money flowing in the neighborhood, in the community, like you said.
Yeah, and I think there's also, you know, there's also a way to structure a Reg D offering to have a small number of non-accredited investors, right? So depending on, you know, you didn't choose to go that route, that's fine. But there are other alternatives that, in terms of under Reg D, you could have like a minimum number of non-accredited investors, and then the rest accredited. So they could participate down the road in terms of other offerings that are done in terms of token offering. Yeah, exactly. So you could just do a different Reg D and open it up, you know, and also, you know, to me, the big benefit's going to be that people in neighborhoods are going to hopefully be able to get affordable housing. So they're going to have access to housing that they otherwise don't have right now. And if the right controls are in place and we have transparency, those people will actually be able to live in those neighborhoods and potentially own real estate in the neighborhoods, which is great.
Great potential for that. Yes. I guess we can start wrapping up.
Yeah.
Have everyone talk about and finish up.
Yeah, I think this is so important because if you're doing these projects in neighborhoods, you know, you want to keep the communities alive and vibrant, but at the same time, you know, you do want to bring jobs, you want to bring, you know, developers, investors. For me, I just want to see everybody get a fair opportunity. Like you said, maybe you have an A fund for the accredited, a B fund for everybody else, but again, maybe down the road that might come down. So before we end, can you tell us, each of you, what you're currently working on?
Sure, happy to. And I think we've kind of covered it, so I'll be real quick. We have Influence Mine is a blockchain company. We actually exist at the infrastructure level of blockchain. We are mining cryptocurrencies, and what that means when you talk about mining of cryptocurrencies, you're verifying transactions on a particular blockchain. You do enough of this verification, and then a block is formed. When that block goes onto the blockchain, you receive compensation for doing that. That's what mining is. So that's just the real basics of the project that we're on, and then we have this Opportunity Zone fund so that a person can invest into that project. And again, happy to talk to anybody about that in further detail.
Thanks. This has been a terrific panel, terrific topic, David. I'm surprised that. I'm not really surprised. I'm surprised at the depth and breadth of what we can do with it in terms of blockchain in the different actors and components to it. So this is really quite stimulating. My focus in my work is land registries and land governance, which leads to economic development, which is a social impact. So this is why this is so interesting, because at the end of the day, this is about empowering communities and developing communities to the fullest through economic development. And I think Opportunity Zone plus blockchain will help bring that about.
Yes.
Great, thank you. Yeah, this has been tremendous. Thank you so much. So I'm focusing on working with different projects in blockchain, crypto. So happy to talk to you about any kind of tokenization projects, which I'm working on a couple right now. I'd love to work on more. And I'm also, as I mentioned earlier, I'm working on creating some funds. So the one we were working on, we put it on hold for a bit, is on the West Coast. But you know, looking to create these funds and looking for people to invest in these funds. And I think the clarity that I was mentioning that we're looking for, you know, I think we'll be there probably in the summer to the fall, and you'll see more of these launch. I know Scaramucci's and Skybridge have been doing a lot in this space. There's a lot of bigger players that have taken a big leap in right now. So I think it'll become more commonplace, but I'm excited about what the future looks like.
And before we go, where can people find you guys? What's like the best website?
Yeah, I have a website. It's mannyalacandro.com. It's my law firm.
I have an email that I like to share. It's jmarkunas@powerofchain.com. jmarkunas@powerofchain.com. POC.
Great, and I can be reached through our site is influencemine.io. And again, I'm Brian Crane, and thanks, David. Thanks, William, for this. It's fantastic.
Thank you.
And
Thank you,
fellow panelists, thanks very much.
Thank you.
Thanks, appreciate it.
Okay, thank you very much, and we're going to wrap up and have a good night, and we'll be back in May.